So what I want to do today, and we probably won't get through it all, this is what we've done so far, which is a lot of stuff, and I don't expect you to all to remember it. This isn't a class, but I think it's important we just, keep a list of what we've done. So we'll take, 5-10 minutes and go through this. If you guys have charts, I'd like to see them. Then today, what I want to talk about is time frames, algorithmic trading, back testing, and actually making the trades. And that, I think, will carry us through. Next week, we'll get into this, which is value versus growth investing. And that's this idea of what kind of investor do you want to be? A value stock is something that right now the price is low. A growth stock is something that's going to keep going up. So like buying Apple. Apple is a growth stock. Tesla. I mean, these stocks are already super expensive, but they might continue. Amazon. These might continue to dominate. Alibaba. These stocks might continue to dominate for the rest of our lives. So that's called growth investing, where you're investing in things that are growing, even if the P to E ratio is high. We'll learn about that next week. Value stocks is a different idea. That's where you look for a stock that used to be high and now it went down for some reason, and you think it's going to go back up. So those are two different styles. To understand those, you need to understand like shares, market cap, P to B, P to E, and these screeners, which we'll talk about next week. Then after that, those fundamental indicators, after that, we'll go back to money flows and cycles, which is like the stuff that's in the Wall Street Journal, the big picture stuff. And that's the Dow to gold ratio, the put to call ratio, the sentiment analysis, the greed to fear cycle, the VIX, all of those things are the big things that people look at. But for today, I think we're getting close to the place where you should be able to make a trade. So the first thing we looked at was horizontal S&R levels. Let's pull up a chart and just kind of start fresh. How's Bitcoin today? 46. All right. I'm assuming you guys don't watch the market, but there was a crazy move yesterday, which just caught everybody by storm. This is what happened yesterday. So the price yesterday was right around this level, which is a fib level at around $51,082. And the price crashed all the way down to 42,000. That's a $10,000 crash in one day. And what's so interesting is nobody knows why. It's not anything clear. Obviously it's manipulation. Obviously it's whales. It's some sort of market manipulation happening. When I say whales, there's a lot of manipulation in the market, in stocks and coins and everything. In gold is very manipulated. And that means that the big players, the government, the hedge funds, the Wall Street people, what we call the smart money, they're watching. They're looking at these same charts that we're looking at. And, what's so amazing is you'd have this price is just on this line. This is a fib line. And I got this by drawing, let's go to the 1 hour. I got that line by drawing fib levels, so remember, let's go to a clean chart. Why did I make the MACD look like this? That's pretty. I don't know what I was thinking. I was just playing with it. Okay, we have all these trend lines. Okay. So I'm looking at Bitcoin for the moment just because of what was going on yesterday. So yeah, I mean, it's so manipulated, this crash in price. Why is this 4 hour there? Let's turn everything off. Okay, so here's like a blank chart. All we have is the price. And as we said, the first thing we want to do is go to like the weekly time frame so we can see this is the entire price of it. And then we would start by drawing our S&R levels, right? And we start with the static, the levels that don't move. So, we'd put the all-time high there, and for me, I like to make monthly levels in white. And, and then we'd label them. We'd make sure that they, over here where it says horizontal line, we would say like monthly all-time high, and then put the price, 65,308, and then we'd make sure to label it on the line. So here are the coordinates, 65,308, and the text, monthly all-time high, 65,308, and we'd lock it. So, okay, that's how we make sure we can label our lines and that they're organized on our object tree. So we can put everything and then we can put it into a folder, that we're going to call 9821 because that's what we're doing today. And so that's how we keep everything organized on our charts. So we draw these lines, we look for levels where it's touched a bunch of time. And I know this is just reviewing, but like this level right here looks pretty important. Yeah, this looks definitely important on a monthly. You see that the price came up here, almost touched it, and then went down. So now it was a ceiling, right? It was support. Then price broke through it and then came down through it and then almost touched it again, came down and then touched it again here. As long as there's like 3 touches. So maybe it's not this one. Maybe it's a little bit lower. Like there's no exact way. Yeah, that looks a little better. Right? There's no exact science to this. It's just seeing how many times price touched the line. Here, it went right through it once. It touched it again. Here, it went right through it a little bit. Here, it touched it again. That's 4 touches. To me, that's it's an important line. You see price came down, but price didn't break this line. And it probably wouldn't because now it's support. As long as price stays here, this is our range. And that's kind of what I want to talk about today is ranges versus trends and how we make sure we know what kind of market is this. Because if it's a ranging market, you can expect it to go up and down. If it's a trend, you can expect it to go all the way up or all the way down. And we got to know which kind of market it is. Is it trending or ranging? Any other monthlies? Here, whatever this level is definitely important because it keeps touching it. Now, I draw my monthly levels, or I draw all my levels from the wick. The wick is the top line or the tail is the bottom line. Some people choose to use the body. I don't. And I think it's better to use the tails and the wicks, the thin lines. So I think that's all we have on the monthly. I mean, maybe there's one down here, but I don't care. Let's just talk about this range right now. Then we go, that's the weekly, I'm sorry. Then we go to the daily, and we'll find other places, where it touched a bunch of times. For example, there's some sort of level going on here, or maybe up here, or here. Does this look like a level? Yeah, this looks like a level to me. And I would mark that. That's a daily. Because price, well, this doesn't look quite right, actually. Maybe because here, maybe it's a little lower. Yeah, that looks a little better. It's just it's the process of guessing. There's nobody on Wall Street, there's no hedge fund, there's nobody in the world who knows what the line should be. There is no should. Some people can feel it better than others, but here price kind of goes above the line, comes back down, Goes above the line, comes back down. Goes above the line, comes back down, and then breaks through. Then below, comes back up. Below, comes back up, then through. And then touches the line, comes back up. So that's at least 4 touches of the line. So we do this for at least monthly, weekly, daily, and 4-hour. That's our first thing we do when we're drawing a chart. It's the absolute first thing, is you get these horizontal fixed support and resistance lines. Support is the floor and resistance is the ceiling. The second thing we do is we get trend lines. Now we're still looking for floors and ceilings, but now they're not horizontal. Now we're looking for diagonal. And what a lot of people don't understand is you cannot just connect any lines. You can't just say, oh, here's a bottom and here's a bottom, so this is a trend line, it's going to go up. You can't just do that. And it didn't. It broke through the trend line. The rule with trend lines, there's 2 rules. Number 1, it has to come from a confirmed M or W. So let's make sure we understand that. What is, Minsu, you know this, what's a confirmed M or W?
Confirmed W is when the E point is above, no, B point has, no. E point has to be higher than B point, and E point has to be higher than C point.
So there's a better way to say that. And that's one thing that I want to introduce today when we're talking about trend. Because the way to determine a trend has a lot to do with a confirmed W. And the way we would explain, so here's a nice W, if you see, it goes from A, B, C, D, E. This is a nice W here. So let's talk about this W for a moment. Just make it clear what we're talking about. Something's going on in the market right now. I don't know what. Okay, so here's the W we're talking about right now. We want to know, so this is a confirmed W, right? It's confirmed because the C point, let's shift over here. We'll just do this once. Why is this so big? Okay. Okay, so now we have our A, B, C, D, E. And there are 2 ways you could kind of describe this as a confirmed W. So first of all, a good W, the D has to be above the B. If they're at the same level, like here, this is a good example of them being at the same level, this is not a W. This is called a double bottom. You could have a double bottom, you could have a double top. Now, a double bottom usually means that price will go up because, and it makes sense, it's testing this level. It tests the level, it goes back up. It tests the level. What does it mean to test the level? Well, right now we're just looking at this chart, but in terms of the real psychology of humans, it's about buying and selling pressure. Do people want to buy it or sell it below this price? If there's a lot of people who want to sell it at this price, it would go through. It would go down. But actually, what happened is there's a lot of buying pressure. So what does that mean? It means that on different websites, and I'll show you some of them today, on different websites, people put in orders that they want to buy, in this case, Bitcoin, at $29.70, at about that price. There must be millions of orders sitting on websites just waiting. And when price came down to that level, everybody bought, which pushed the price back up. But then it came back down, and then lots more people bought, and then the price just went up. You know, it's about this buying and selling pressure. It's about, you know, human fear and greed. So this is not a W, but this one is. Now, there are two things we can do once we know it's a W. So the D is above the B, but that doesn't mean it's confirmed yet. Because what if it went A, B, C, D, and then only stopped here and then went down? That would not be a confirmed W. Price needs to cross the C. So at this point right here, where price continues past the C, now this is a confirmed W. Now, there's a couple things that this tells us, two things really that are absolutely important. One, the B and the D point can be described as swing lows. It's really important that we understand a swing low and a swing high. So when we just say low and high, that doesn't help us very much. If you look at price from like over here to over here, if we're looking at price from over here to over here, the price, the low is, I mean, it's getting higher. Here, the low is here, and then the low, and the low, and the low, and the low. The low is getting higher, but none of these are a swing low. And it doesn't really tell us much, because this could change direction at any time. A swing low is when you have at least 3 candles, usually 5, and they look like the candles are going up and then down. That would be a swing high over here. So you see it with the A point. You have like 1, 2, 3, 4, and then this A is the 5th candle. And then lower, lower, lower. It doesn't matter that this next one is higher because it's not higher than A. So A, because you only need 3 candles. 5 is better, but you only need 3. So you have like this one, this green candle over here is going higher than A, then this red goes lower. When we got to this candle, A is now definitely a swing high. That's really important because the way we know that we're in a trend means the market is going up. And there's a saying in trading, hi Anais, there's a saying in trading that the trend is your friend till the end of the trend. The trend is your friend. Because if you know the market is going up, then you just buy. The market's going up. I mean, of course it goes up and down and up and down and up and down, but as long as you're trading on more than a few minutes, it's going to go up. You want to know, you know, as I've said before, it really doesn't matter what price you get in at. What matters is when will the direction change? Because if the price is going up, you just keep buying. You know, every week, every month, you buy a little bit. But when the direction changes, that's what you want to be able to identify. So we determine if there's a trend by looking for the swing highs. Here, that's the A and the E. And we know that because the E also, you have 1, 2, 3, 4, 5 candles. If we look at these 5 candles together, you have it's going up, it hits a high point. It's going down, it's going down, it's going down. Now, what's the next thing after E that's higher than E? All the way over here. And what is this? except another W, right? This is another W because you have A, B, C, D, E. When you look at this, is it a confirmed W? We know it's confirmed in two ways. One, price crosses this C line. That's a high? Pretty much there. So price went down. Is this a swing low? Well, look at the 5 candles. We have down, 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 or maybe down, down, then it makes a low over here, and then up, up. So yeah, this is a swing low. And it's higher. It's a higher low. This is the language that people use. Higher highs and higher lows. So the A and the E, that's higher highs. What they mean when they say that is not like this. This is not an example of higher highs. When people say higher highs, they mean swing highs. They mean a high where you have this sort of shape with 3 or 5 candles. So this A and E, this is higher highs. This B and D, this is higher lows. And what's happening to the price? Keeps going up. You know, and then you have a new swing low. Oh, sorry, a new higher low. This is a swing low, and it's higher than the previous one. Here's another swing low, and it's higher than the previous one. So we're getting higher lows. And we have the A as a swing high, the E as a swing high, and then here, whatever this is, as a swing high. We're getting higher highs and higher lows. We are in a trend. And what's going on here is price has continued to go up. Now, if we went back all the way back to here, could we have predicted it? Let's look back over here and see what we're seeing with the swing highs and the swing lows. So as you see, again, I mean, look at this range. It's so clear. If you just drew these two weekly lines, or monthly, I think these were monthly lines, but if you just drew these lines, you could have been trading from January of 21 to February, a whole month. You could have made money, made money, made money, made money, made money. You know, and all you're doing is you have these S&R lines, but you have to know when it's changing direction. So these aren't really anything. Here, I'd call this a swing high. This right here. Right? Because you have 3 candles. Now, you don't have 5, so it's not a wonderful swing high. And then what about this? You have, it's going up, you have a high, and then down, and then this is about the same. So again, it's not a wonderful swing high because it's 3 candles, not 5, but it is higher highs. Do we have higher lows? Here's a low. Is it a swing low? No, it's not really a good swing low, so I'm going to say no to that. But that's the low we have. This is a nice swing low, right? You have 1, 2, 3. So that would be a swing low. But then it becomes not valid because we have a lower low. You need to have higher lows and higher highs. So if you have higher highs, but you don't have higher lows, this thing is not going to go all the way up here. It's not going to keep going up because you got a lower low. So then here's a nice swing high, but it's not higher, it's still lower. So that this part now, to me, this whole part here is like over now. Now we have to start again. We have to start counting again. Now we have our swing low, we have our swing high. We have a little bit of a lower low. It's lower than this. And no, that's not a higher high. So it's still not valid. So, you know, because what we're looking for is when will it shoot up? And we don't get that until we're over Here we have our swing low. I mean, this is what people are just looking for. They're looking for where the swing lows and where the swing highs. So we have a swing low here. On this red candle. Then we have a swing high because we have 1, 2, 3. So here's a swing high right here. Then do we have a higher low? Yes, we do. It could be this red one, it could be this green one. I mean, I'm not sure. There's no science to this exactly. But it does seem like we have 1, 2, 3. You know, that sort of shape that we're looking for of this 1, 2, 3 shape with the low in the bottom in the center. So it kind of looks to me like this is a higher low. Okay, that's good. Do we have a higher high? We have it up here. And at this point, this is where you could enter. You know, and here, if you entered, you would have done very well because it would have continued all the way up here. You would have entered at, 45 and it went all the way up to 60. How do you know that it's not going to keep going higher? Well, are there higher swing highs and higher swing lows? Here was the swing low. Then you have the next swing low. That is higher. Then you have a lower swing low. I'd get out. You know, it's the trend. Now, there's kind of a bigger or easier way to do this. So let me get rid of this stuff. Go back to blank chart. There is a a indicator you can put on called zigzag. Zigzag will automatically show you the trend and the higher and the lower, the highest high and the lowest low. So this is kind of what this indicator does is exactly what we were just talking about. But you never want to start with an indicator if you can't do it yourself. You know, be able to identify the higher highs and the higher lows. But it would tell you pretty much where we are. So where are we right now? You know, nowhere great. But if you got in here, you could have put the zigzag indicator on, and even when price, let's say you got in here and price is going up and it's so wonderful. Price starts to go down and you're like, oh my God, should I sell? What you need to know is, are we in a trend? Because if we're still in a trend, it's still going up. Now, trends definitely have what's called a retracement. There's no question that nothing goes up always. It goes up and down and up and down and up and down and up and down. That's always true. So you have to decide when it goes up and down, at that down, do you sell or is it going to go up again? Now that involves some of the other things we learned. So far, we had pretty much looked at the S&R lines, the trends when you have a W. So where was our pretty W? Our pretty W was over here. When you have a confirmed W like this, and you know it's confirmed because you have A, B, C, D, E. The B and the D are higher lows. The A and the E are higher highs. And the price crosses the C line. Okay, so now this is a very nice confirmed W. We knew that price, we could have bought in right here and price would go higher. And traditionally, our stop loss would be set below the B point. So what that would mean is for this trade, if you're being sort of traditional, you would have bought here. Your stop loss would be set right below the B point and your take profit would be at your next level. So here that would be like the monthly level. Now I would not take this trade because you're only looking at a 1.24 risk to reward ratio. What does that mean, risk to reward? If you risk $20, your reward would be 20 times 1.24. And that's not very good. You never, ever want to take a trade below 2. 2 should be your minimum. So that if you risk $20, you make 40. If you risk 100, you make 200. If you risk 5, you make 10. You always want at least a 2-to-1. And lots of people want something better than that. Now, there's 2 ways you get a better risk to reward. One, the price goes higher, but that you can't guarantee that. The other way you get a better risk to reward is by raising your stop loss. If my stop loss is, at 5%, now this is a great trade. If I risk $20, I'd make more than 80. If I risk $5, I'd make more than 20. It's a good trade now. But you take a risk. Now, if we had our stop loss, you never want to put it randomly. So let's pick the last. Generally, the rule is to put it at the last swing low, but the swing low is so low here. If you did a 6.57% stop loss, you'd still be in, right? It would have gone up, price would have gone up, then down to the C level, then it would have gone up again, then it would have gone down, but it would have stayed inside the red area, so you're not out yet. I mean, it's really respecting this line. It goes up, it touches the line. It goes up, touches the line. It goes up, and then you could have taken profit when it hit your monthly level, and then you're out of the trade. And it's good you're out, because here it would have broken past your red and you would have been out of the trade. So that would have been a good trade right there, just because you found a W. The other thing we can do with W's is we use them as trend lines. We connect the B point and the D point, and that's our trend line. Now, that trend line might be good in the future. If Bitcoin is ever going up to like $80,000, these trend lines don't necessarily ever end. And the same thing is true for an M. So let's find an M. Let's get rid of this stuff. And here is a nice looking, ominous looking M. Right? So we have the same idea. But now we're talking about lower lows and lower swing highs. Right? Instead of higher, it's lower. So what is a swing high? Well, we have, this is definitely a swing high, right? Because you can see we even have 5 candles. It's going up, it hits this high point, and then it's going down. So this is our swing high. Then we definitely get a swing low, right? It's going down and then going up. So we have a swing high and a swing low. The next thing we're watching, now right now this is a daily, but you could be watching it on a 6-minute, There's lots and lots of these. I mean, right now, that's what's so interesting about trading. This looks like there's no movement at all. But if you set it to auto, it looks huge. If you're looking on a daily time frame, these are gigantic moves. All the way from 60,000 down to 30,000. That's a $30,000 move. But if you look on a 1-minute time frame, it's just as big moves. But look at this gigantic move. This is from 45.8 to 46, a $1,000 move. That's what's deceptive, is they look the same. You look at a daily chart and you see these big moves. You look at a 3-minute chart, you also see these big moves. But on a 3-minute chart, you're just not talking about the same percentage. So on a daily chart, we want to know percentage, like what was this percentage move? You go over here to your position tool. This is where you're drawing your long or short position, and you can go to price range. and let's say I want to know this move, that's a 98% move. 98%. Now let's look at the same kind of move on a 3-minute. Let's look at a move from like here to here. Is that 98% down? That's 3.7%. So percentages are more important than price. You know, it's more important to know, are you making a 2% or a 3% move than to know, are you making a change in price? Because everything has different prices, but percentages are the same for everything. If you have a good strategy and you can always get a 1% move, that's going to be true. It doesn't matter if you're trading Apple or Bitcoin or Tesla or some small stock, 1% is 1%. Going back to the M, let's just finish this out. So we have the swing high, a swing low. Then next is another swing high, but it's lower. And then next is another swing low, and it's lower. So we end, price went below the C point. So this is now a valid M. And that tells us that the trend has changed. This is no longer something that's continuously going up. Now the trend has changed, and now it's going down. It's confirmed that it's going down. Then we get, you know, after here, we get another little swing high. This is a lower high also. But then do we get a lower low? No. The trend is no longer going down. We have another new swing high and a lower swing low. So here we have a little baby M. You see, here's a little baby M, right? Because we have right here. Because we have price is going up, we have a swing high, then a swing low, then a lower swing high, then a lower swing low. This is a valid M. Did price cross the C point? Yes, it did. You could buy right here, and price is going down. Now, price went up first, and then it eventually went lower. Then it went up again. That it went, you know, maybe that's not lower. So this would have been the low point. You know, the challenge is that things don't directly move. They always go up and down. You just want to know the trend, the general direction. Then if you're looking, you have a swing low, swing high, swing low, swing high. Here's an even babier M. Make it a little bigger. Right? This is a little baby M because you have a swing high and then a swing low and then a swing high and then a lower low. So this is a little baby M right here and goes down, goes up, goes lower down. This is the C point. It crosses the C point, so you could have bought in right here and price would have gone down. You know, so these M's and W's are really powerful. Here's a W. And when it crossed this C point, price kept going up, right? Everything is kind of M's and W's. They're all over the place on every time frame. So we had learned the horizontal, diagonal, the M's and W's. We also learned these dynamic S&R levels, and that is where you put on these moving averages. I think I put on a 50 and a 200. This white one is, oh no, that's a 21. White one is 21. What's the EMA? 21 EMA, okay. So let's look just at the EMA for a moment. This is a 21 EMA. So this is the 21-day exponential moving average. Let's look at whether or not this is useful for us for price. If you were just using this as a floor for price, the price comes down and touches it. This would have been a great place to buy because price then went up. It comes down and touches it. This would have been a great place to buy because it comes back up. It comes down and touches it. Good place to buy because it went back up and then goes through it. You could have made money just on this one average. What about selling? Price goes up, touches it, sell, goes down. Goes up, touches it, sell, it goes down. Goes up, touches it, sell, it goes down. You know, and you can, this pretty much works for everything. You can just look back in time, and this 21 EMA is a pretty good reflection that when it's above, this line is a floor. And every time it comes close to the floor, buy. And when it's below, this is a ceiling. And anytime it's below, anytime it touches the ceiling, sell. So that's the EMA. For the MAs, I wanted to have a 200 and a 5, here 50. So the 50 is green, and I want this to be a 200. So 50 is the average for the last 50 days. You know, so obviously when the price falls down, this average doesn't necessarily change because this is the average of the last 50 days. This is the average of the last 200 days. This tells you on sort of a bigger time scale. When Bitcoin or anything is way above the 200-day average, it's all the way up here. Now you can see it's really respecting the 50-day. It touches it, goes up, comes close, goes up, comes close, goes up. But it's so far above the 200-day average that you kind of know it's going to come back down at some point. You know, the market can't go like this forever. So it crashes back down and then look, touches it, touches it, touches it 4 different times. You know, then comes up close, goes down again. Now this key point right here is called a death cross. And we learned this last time. When the 50 goes below the 200 is a bad sign. Now you can just put on an indicator that'll just draw these lines for you, but it's called the death cross. And when 50 goes back above, looks like it might happen in the next couple days, that would be a golden cross. That's a very good sign that something might continue going up. This dip right here wasn't real. It already immediately started going back up. You know, and if you look on a smaller time frame like 12 minute, you could see you had this dip, this huge dip yesterday, and it went all the way down and then immediately jumped back up. You know, and then it went down. Now it's playing with this 50 again, right? It's touching it, crossing it, touching it, crossing it, you know. But at some point soon, oh, it was here? No, 50 went down. This was a death cross. If you were just watching the death crosses right here, you would have sold, and look how much money you would have made. That's an insane move. You know, so if you shorted it right here, if just watching the 50 and the 200. You know, and there's lots of stuff you can watch. But generally right now, we're talking about nothing but floors and ceilings. There's 3 kinds of floors and ceilings. There's the horizontal ones, there's the diagonal ones, and there's the moving ones. That's it. Those are the floors and ceilings. We've already gone an hour, so I don't want to spend too much more time on the old stuff. This is what we just did right now. We also had MACD, Fibonacci, and RSI. Let's save that for next time. Let's go into talking about your charts if you have any to share, and then talk about what I want to talk about today, which is we're getting closer to actually making a trade. You guys should be at the place, if you're interested, where you're paper trading, where you start to make 10 to 50 trades without using real money. Or, I mean, I guess you could use $1 or $5, but you really shouldn't be using real money. On TradingView, you can do this by going to the bottom, trading, click trading, and I know you can paper trade. How do you paper trade? Strategy tester? No. I know you can paper trade on TradingView. It gives you $1 million to start.
What is a paper trade?
A
Fake
paper
trade?
trade is when you trade with not real money. Let me see. You can do it on most websites, most like exchanges or anything. So simulated trading lets you trade with fake money and practice buying and selling. Everything is the same as if you were trading with real money, except you can practice. So logging into paper trading, your account balance starts at $100,000. It has buy and sell buttons. How do I find it? Oh, okay. So you go to trade and trading settings. Let me try this. Let's say we wanted to make this trade. So you right click, go to trade, what's the trading settings? Say I wanted to trade, create new order. Yeah, it says log into your broker's account. I don't want to do that. Here, paper trading. Okay, so you go to trading panel on the bottom, and then you can maximize it. These are all different websites that allow you to trade. Don't use any of them. I wouldn't, or I don't use any of these. I mean, some of them are fine. I use Gemini sometimes, but I don't use it from TradingView. I have some Alpaca. Alpaca is an interesting idea. Okay, so you go to paper trading, you connect that. Now, ooh, look, I already used this. I made $327. What was my history? This was my history. I was mostly buying stocks. I made a bunch of trades. Rejected and canceled. Well, these filled. But yeah, these are all different stocks I was buying. Fun is an interesting stock, Funfair. That's the stock that makes, there's a toy that's really popular in America. It's like little dolls, and they have these little plastic dolls of like every famous celebrity. I don't remember what CTHR is or ZFGN or anything. Tup is Tupperware, the thing you put like old food in. They did really well. But yeah, so you make your, you have your paper trading. It starts you at $100,000. And then if you want to make the trade, now will it let me? Yes, now it'll let me. So I have a buy price, I have a sell price. So I would, let's say I want to buy it at, what was the price here? 51,063. So I want to sell. I don't want to buy, because selling is when I think it's going to go down. So I was going to sell it like 51,063. The quantity, well, I can't afford that much. I can't afford 1 Bitcoin. Let's do 0.005 Bitcoin. And then it's telling me it will sell 0.005 Bitcoin at this price. The time in force, which is at the end of the day, will this trade still exist or will it be over? You can change that. I'll leave it on for the day. So at the end of the day, it's over. Now I could do a take profit or a stop loss. Let me show you a long trade instead. Cancel this.
David, I tried to make the trade. Can you, but it doesn't really show on my chart. Can you show me again how to do the
Sure. So
trade?
let's say, let me make it a long trade because that's a little more reasonable. Let's say we wanted to make this trade right here. And I think the price will go up. And so here's the trade I want to make. I'll make it a 1%. Yeah, it's a 1% risk. So if I have a trading account of $100, I'm risking $1. And it's a 4 risk to reward ratio, so I think I'll make 40. Sorry, I think I'll make $4. So now if I want to take this trade, I right click and I would create a limit order. And here's my trade. I want to buy it. I'll buy it at this price. How much quantity do I want? I don't want to buy, say I want 0.05. I'm risking $25. My percentage risk is 0.02, okay? Now I can have a take profit and a stop loss level. Let's turn those off for now. Now I just pressed buy and this is what you should see on your chart. Okay, now that has been bought. Now, of course, this isn't real because this is the past. You know, I would have to buy the present moment. Then it will change and it'll go up and down. But the other thing I can do, I can modify the order. Let's say that I want to set a stop loss. If it goes below this level, I want out. I don't want to lose more money. This level is 43841. Modify the order. That's my stop loss. Price, make it 43841. Then I could lose a maximum of 3250. Now I have a stop loss. And if price goes below here, I'm out. I could also set a take profit. Let's say if profit touches the 50 line, I will sell. So the 50 line, I mean, it's moving, so it's hard to predict where it's going to be. But let's say it's over here, so 46,330. Modify this again. I take profit at 46,330. And my profit would be $95, $91.95. Modified the order, and there's my take profit level. Now I have an order, and it would have already sold, right? Because it did hit this level. I can adjust the take profit, modify that. Let's make it higher. 46,411. Oh, it still would have sold. So either way, that's how you do a paper trade. Is you set your buy limit, your stop loss, and your take profit, and you just see, would it have played out? Now, obviously, this is a daily chart. Oh no, this is a 12-minute chart. So we could be watching, each candle is 12 minutes and watch it play out. You want to end it, you just click the X. Now, I was going to talk about actually using the websites to make a trade, but I think we should wait on that for next week. Right now, do any of you guys have things you want to share, either charts or anything to share? Is that a no?
Yeah, no, not really.
Okay.
I have it, but I don't know what I did, to be honest.
Well, wait. What's the problem with it?
Okay, I'll share. I went on Facebook and
Okay.
I didn't do the monthly, but I did weekly, daily, and 4 hours charts.
Looks good.
And I also drew the trend lines. And I tried to play with MACD and also the Fibonacci thing that
Good.
you showed last week, but I forgot how to use it again. So I just stop at this point. So I start to find all those W's and
It looks good. I mean, it looks like you're playing with the right tools.
I
We're on
I
a
think
4-hour
I
chart. Okay.
made the trade because of this MACD. I think so.
I'm not sure what that MACD is telling you. Like, I wouldn't have drawn it that way. I would have drawn the MACD from the bottom where it says February, but the top would be the next higher low. You drew it to a high. You drew it from a low to a high.
So for
Yeah,
example, here.
I'd move the top point of that line down. Yeah, down. That's right. You're measuring highs to highs and lows to lows. You can't measure a low to a high.
Okay.
So now that MACD is going up, and you can see the next one is a higher low, and the next one is a higher low. It keeps going up, and then what happens? It goes into the green. So if you were watching price at this point, actually, that's great. So see that line? Now go to price. You have a trend line. Draw a trend line from the left. No, not that one. The other. Yeah, from there. Draw a trend line from there.
Wait a second. Let me just delete this.
Okay, so take that trend line, take the top of the trend line, and draw it down to the lower low. Or nope, keep going to the right, where it says March. Yes. Next red one. Yes. Now, if I was watching that period of time, that's from February to March. Now, price during that time did go up. But looking at that whole period of time, you have a lower swing low, right? That February low is whatever that is, 254.85 or something. And then that March swing low is a little bit lower. Now look at that compared to the MACD. Double click. No, you already have the MACD on your chart, don't you? Just double click. Yeah. Now look at those two compared to each other. You have a MACD going up. So what does that mean? It means there's more momentum. Momentum is like the speed of the train. That's the way people describe it, the speed of the train. So it's like you're shoveling coal into the train, the old school train. And that's, people buying this. There's more and more momentum, and you can't slow down a train very easily. But what's happening to the price? Is the price going up as the train goes faster and faster? No. The price went down. If you had bought in at that price, anywhere around that price, because you saw that div, look at the profits you would have made. It would have gone all the way from 253, and it just would have never stopped going up. That would have been the place to buy, because you got to see on a 4-hour chart. I mean, a divergence like this on 4-hour is really powerful. Daily, 4-hour, anything like that is a really powerful divergence. You see divergences all the time if you look on a 3-minute or 6-minute. They're all over the place, but they don't mean that much. The higher the time frame, the more valuable the indication. So the next line you draw on MACD, I also would disagree with, because you drew from the low to a high. I would draw yes. So now you have momentum going down. What happens to price during that time? Draw a line on price from the swing low, which would, I think, be the B point of that W. Yeah. That's a line. You need to change it to trend. So from the B point to the W, and match the length of that line you draw on MACD. What's the next low? Yeah, the lengths have to match. So now you had price clearly making higher swing lows. It doesn't matter kind of what happened in the middle of that. Yeah, in the middle of that, price went up. But we're not talking about the lows and the highs. We're talking about the swing lows and the swing highs. So you had price making a higher swing low. Price is going up. Even though it went up and it went down, but overall, price is going up. What's happening to the train? Is the train speeding up? Train's slowing down, right? There's getting less momentum. So that would have been an okay time to sell. You wouldn't have made a big sale. But then if you connect that momentum to the next momentum on MACD, you might want to just draw a new line. Yeah, you could. There. So you still have momentum going down. You still have momentum going down and price going up. So it looks like there could be a correction and price could go down. But let's see, why did price jump back? I might want to put on, so you had a W there, it went up. You had an M though after the W, a confirmed M. I might want to put on one of those 21 EMA things, but yeah, after there was a W. That's not the one I would use. Oh, that's okay. That has 3 of them. That's good. I'd put on 21 day.
I don't know how to put 21 day.
Okay, go back to the function button.
Yeah.
Type in EMA. Go to the top one, moving average exponential. Yeah.
This one?
Yeah.
Right.
Yeah, you have the free version, so you can only have a certain number. Now click the gear and now go to input. Yeah, and you can change the length. Okay, so at the B point of the W was a really good place to buy because it went right below and then bounced back up. Then after the W, the price started going down and then it crossed through the 21 EMA. So I would have waited for it to bounce back up on that green candle, and I probably would have bought right around there. And then it gapped up. No, previously. Nope. Earlier, before the gap, yeah, somewhere around there. Because that's where it was touching the 21 EMA. I'm just looking for places where it touches that line. You know, I just want to see, is it using the line as a ceiling or a floor? That's always what I'm looking for. And at that point, it was using it as a ceiling, and it kept touching it and testing it. And the third time it touched it, you know, I would have looked at MACD. So right where your arrow is right now, yeah, about there. Well, next, no, where it was on price. Yeah, go to the next time it touches the 21 EMA. Yeah, right about there. So I would have seen, okay, it's touching that ceiling. Now, I always want to know when it touches it, is it going to break through the ceiling or is it going to go back down? And that's when I would have looked at MACD and I would have said, what's going on MACD right now? Does it look like it's going down or does it look like it's going up? And clearly at that moment, MACD is going upwards, right? So I would have said, okay, I will take a bet that price is going to break through this ceiling. You know, the MACD is used to confirm. It always starts with support and resistance.
But I have a question, like, what at this point of time, like the MACD is going down.
No, on the long term, MACD is on a downward trend, and I think that's true. But on a shorter term, MACD is pointing upwards. I mean, the actual candles of MACD, the bars are going up.
Oh, yeah. Mm-hmm.
Like those white ones are getting smaller. They're moving towards the green ones. So
Mm-hmm.
on that short period of time, MACD is definitely the train speeding up. And then you got that little green, that MACD jumped into the green. That means there's a lot of momentum for that moment. People are buying. And then it cools back down, and then I would have seen, okay, where does it touch the 21 as a floor, which is right above, right around there. And now it's touching it again. So I look at MACD and I see, well, does it look like things are speeding up or slowing down? Kind of looks like things are slowing down. And it crashes right through the 21. It's kind of always this game of, is it touching one of our levels? It could be the monthly, the weekly, the daily. It could be the trend line. It could be the 21 EMA. But is price touching one of our levels? And then we look at one of the indicators to see, well, how does the market look? Does it look like it's speeding up or slowing down? Is there more volume or less volume? That would be another thing you could add, is a volume candles. Right now, there's no volume on your chart. It would be where the price is. You would have to add it as a new function.
Volume.
Yeah, just volume. Yep,
This
top one. And that gives you the volume candles. The red means, a big red candle means the price is crashing. And a big green candle means the price is going up a lot. And there's a lot you can do with these candles that, I'm not going to talk about right now, but in terms of understanding kind of, is the price being pushed up or being pushed down? But just generally, the candles help you a lot. Okay, but it definitely looks like you're making good progress. All right, give me the screen back unless you have another thing to share so I can show a few other things today. ETH dot and link? Am I going to lose money by being in this class right now? What's going on with ETH dot and link? I'm really trying to learn to trade DOT better. So I'll show you my strategy for DOT. I'm trying to do right now. On my chart. This would have been at 4 o'clock a.m. Okay, I wasn't awake at 4 o'clock a.m. Nice M here, though. Man, if you look at that M, if I just watched that M, all I needed to do was put a buy order right here. I mean, you're talking about a weekly level, which is very powerful, and an M confirming at that weekly level, price definitely. I should have known that price was going to drop. That would be really clear. And here we have a W. It's not a very nice W though, but the W has not confirmed. No, wait. Price, yeah, it did. It confirmed right here. But it's definitely playing around this weekly, daily level. So nothing huge yet. So here's what I've been doing, and I think this is useful. I've been putting on these lines, these purple and blue lines. And what I'm trying to do, and this is something I wanted to talk about today anyway, algorithmic trading and back testing. So let's talk about kind of these things. We already talked about paper trading a little bit. You should definitely be making trades before you start using real money. I said next time we'll get into stocks. And if you want, I can also walk you through how to actually use a website to make a trade. I don't know what you guys are using. You're not in America. I'm using TD Ameritrade, but I don't know what you guys are using to make a trade. If you want to trade coins, I can teach you that. But if you want to trade stocks or buy stocks, you have to tell me what you're using and show me. So let's see, we have about 30 minutes left. Okay. So the first thing I wanted to discuss is time frames. When you look for a trade, let's say I'm looking for a trade here. Let's go back to your chart. Okay, let's go back to Bitcoin. Okay, so when you're looking for a trade, how do you know what time frame you should use? You know, should you look on the daily? Should you look on the 6-minute? What time frame should you use? You need to have essentially two. We call one of them environmental. That's a big time frame. So, you know, you want to be able to look at the general environment. So I'm looking at a daily right now. It could be daily, it could be 4 hour. It's not going to be less than that probably. Some people who are day traders might use 1 hour, but for you guys, it'll be daily to 4 hour. You want to know what's generally going on in the market. So here, how's price generally been doing? Well, it's generally been going up. Here, it was generally going down. You just kind of want to generally know. You could use that zigzag function to see what's generally going on, but you just want a general idea because you want to go with the trend. The trend is your friend. So if you have swing high, swing low, higher swing high, higher swing low, higher swing high, higher swing low, I mean, that should tell us that in general, there's a trend going on. This was sort of an anomaly, but in general, the trend, all of these, you know, swing high, swing low, higher swing high, higher swing low, higher swing high, higher swing low, higher swing high, higher swing low. I mean, that's, you know, that would have been going on all the way since December of 2020 to April of 2021. That's months, you know, months and months that it would have been following a trend. But you don't enter a trade on this time frame. You enter a trade on your execution time frame. Now, that wouldn't necessarily be a day. It might be something more like 30 minutes, where each candle is 30 minutes. So let's say I think this is the daily chart right now. I think price is going to go up. You know, it's been a trend. The 50 is still going in this direction. I think it's going to cross the 200, which is a very good sign. That would be the golden cross. So here's what I want to do. When we make trades, you always want to make a prediction. You never want to just look at the market and make a trade. That's how a lot of people lose money. You want to plan your trades in advance and wait for a good setup. So what that means is, let's say I have a plan. Let me put on MACD since here was MACD and RSI. I'm so happy that I made this MACD so pretty. Look how pretty this is. Oh my God, such an artist. I'm really impressed with myself. So I want to plan this trade. Now, what am I looking for? I think price is going to go up. If that was going to happen in the next couple of days, what would I want to see? Well, I like divergences. So I'd want to see, maybe, this is one possibility. What if price like went up and then went down, while momentum went up like that? You know, would that be good for me? Well, if that happened, then we would have price going down and momentum going up. That would be good, right? Because if that happened, then I would know, okay, here's a very nice divergence. There's more gas in the train. There's more coal. The train is going faster and faster, higher lows. But price is going down. Maybe that's not a pretty way to draw it. So price would be making lower lows like that. You know, if that is my prediction, then, you know, and as price is going down, let's say I think that's also going to affect the RSI, and the RSI would go down, something like that. This would be a prediction. And then, you know, right now I don't have my monthly and daily levels on here. Oh, let me put them back on. Oh, there we go. A weekly level right there. I would love to take the trade at this weekly level. Now, I don't know if this is going to happen, but the point is, you do not look at a market and then just make a trade. You plan. If this happens, I would definitely take this trade. I would buy in at this price. I would set my stop loss below the swing low, and I would take profit. Well, what is the next important level we have? On daily. There we go. I would set my profit right there at the daily level. That's the trade I'm sort of hoping for. I would stick. So I would buy at 38,221. I would stop loss, which means get out if it hits 34,984. Now my take profit 1. You always want to take profit on the way up. Here's a big mistake a lot of people make. They try to sell at the top. You can't. You'll never sell at the top. You'll never buy at the bottom. You know, it's not a real thing. You don't want to sell at the top. You want to sell while it's going up. Never sell while it's going down. That's what people do. They think like, okay, I'm going to wait until price hits the top. But you're never going to hit the top. Then it starts going down and then you sell. But by the time you've sold, it's down here. You want to sell on the way up. You want to take profits. You don't go, nobody goes poor taking profits. So you want multiple places planned. So the first place I would take profits would be this 42,097. My take profit 2 would probably be up here. And I'd probably want more levels, like 4-hour levels. Let's see if we have some other levels here, because that's a pretty big move. Yeah, we do. Oh, interesting. Nothing good, though. This whole space, there's no levels. What that says to me is if it crosses this line, so 43,017, my take profit 2 will be like 43,017. And then after that, my take profit 3 would be all the way up here at 47,000. That's a huge move. And then let it ride. So what do I mean by that? Stop it, computer. Stop it. What do I mean by that? Let it ride. Never sell everything. Always keep a little bit, because you don't know what's going to happen. And you might, you know, a lot of people make this mistake. They buy here, or they buy at this weekly level. That's where I want to buy. They buy at this weekly level, because I don't want to buy at the absolute bottom. I don't trust that at all. I want to see higher highs and higher lows. I want to see the prices going up. I want to see MACD have a divergence. You know, I want to see these confirmations. So then what a lot of people do, that's a big mistake, is they buy here and the price went up. They sell everything here. But then the price keeps going up. And they're like, oh no, I missed all of this profit. So you want to have multiple places where you're going to take profit. And then when you take your, so generally the rule is at the first place you take profit, how much profit should you take? 25% to 30% profit. That's a lot. That's a lot of your profit that could go higher, but don't get greedy. You know, make the money. And when you do that, you take the profit and you do one other thing. Move your stop loss up to your original entry. So here's how you protect your money. Right now, if the price goes down, you could lose some money. If the price goes up, now it's 42.33 or whatever our take profit is. Oh, we said the daily 42.097. Whatever the first take profit is, and you don't want to make it too small, you know, but whatever your first take profit is, if it was here 42.097, you take out, you know, half of the money or a third or fourth of the money, whatever, and then reset your stop loss all the way up here. Now you can't lose money. Even if the price goes back down, it closes the trade at the place you entered. In fact, what some people do is they move their stop loss, they just keep moving it up. As the price goes up, they just keep moving it up. Lots of people do that. So that no matter what happens, you're going to make a profit. And you always want to do that. You want to move your stop loss. You want to take out money. You don't just set a trade and walk away. You have to have multiple take profit places, and you have to be ready to move your stop loss up because the market goes up and down. And you want to make sure that if it went up, you know, if you bought over here or something and it went up, if you didn't move your stop loss, like what if you bought here? The price would have come back down and knocked you out. Like if you bought on this weekly candle right here, let's say you bought over here on the weekly and you set your stop loss all the way up here. That would be a very good stop loss. If you left it that way, price would have gone up and then price would go down just enough to get you out. You have to know this is not a coincidence. The big Wall Street people, they know what your stop loss is. Everybody's stop loss, all the beginners have the same stop, they know. So what do? They drive the price right below the green line. And then millions of people, I mean, it's funny actually, it's sad, but it's funny. On this big drop in Bitcoin, what happened was they did, you know, all of this analysis said Bitcoin was going to keep going up. There are so many Wall Street people who made millions of dollars on this because they know everybody has their stop loss here or here or here or here or here. Look where the price went to, right below this 4-hour level. That's not a coincidence. It's manipulation. You know, the fact that these touch the levels is because the big money, the money that can actually push things up and down, they know where the stop loss is. So if you're not careful, they'll just stop you out. We call these the noob stops for the new people. Because the new people to the market, they don't know. They get stopped out. I get stopped out all the time because I'm new to the market. I've only been doing this, you know, a couple years. But that's okay because I keep my stop losses very small. This is a 1.69%. That's fine. I can lose 1.69%. If I'm trading with a couple $100, 1%, that's okay. I can lose that. I can't lose 10%. That's not okay. And that's the problem is sometimes, you know, you have to follow technical rules. So originally your stop loss would be below the last swing low. That's the rule, which is all the way down here. That's a pretty big amount of money to lose. You know, I don't know what that is, but if I set it like right below that level, 7%, that's so much money. I can't lose 7%. And so as the price goes up, I immediately have to move this up. So now I can lose 0%. So you always want to be moving. You always want multiple take profits. You always want to leave a little bit, unless you don't, unless you want to get out, but make sure you have multiple take profits. Now, that's the idea of planning your trades in advance. Now, you might plan, this is like your daily plan or something. But you might also have a 30-minute plan. You know, what do you think price is going to do here? It doesn't matter what you think. It matters what you plan. So I don't know if price is going to go up or down, but if price goes down, what do I want to see? If price goes down to the next level, okay, then what do I want to see? If price does that, so you have a lower low in price, what would I want to see momentum do? I want a divergence. That's what I'm looking for. So what would I want to see momentum do? I probably want to see momentum make a higher high. Something like that. And then go up. And then I would have a lower swing low in price and a higher swing low in momentum. And then I would take the trade. And that would be my plan. And I would probably, let's say I want to take the trade at this daily level. I would set my stop loss below the swing low. And I'll take profit. Here will be my take profit places. Let's say take 10% of profit because it's only very small. But then that gives me the chance to move my stop loss up. And then I'll take 30% here, and then I'll take another 20%, whatever. Like, you have to have these plans. And at the same point, you might have another plan because you can always, you know, put these into a folder. Let's call this my long plan. I'll put these into this folder, and then let's call this my long plan. You know, you don't want to get rid of it or delete it. Just, you know. Now, that's my long plan. What's my short plan? You know, what would be my plan? And I don't know if you want to short. Shorting's more dangerous, but just in case you want to plan your trades, what if price goes, you know, doesn't go up? What if price goes up a little more today? And then what if it touches this 200 and then crashes all the way down? Okay, that might happen. I don't know. If that happens, what would I want to see on momentum? What would make this a good trade? So you have price going up and then going down. As price goes up, I would probably want to see momentum go down. Because then I would have price going up and I would have momentum going down, and then I would know, get out. You know, and I would, let's say I would enter my short over here, put my stop loss above the previous swing high, and here are my like 1, 2, and 3 take profits. And now I have 2 trades planned for the next week. You know, you don't want to do this every day. You want to do this on Sunday, something like that. You want to do this once a week. You want to look at whatever stocks you're looking at and try to make predictions. Not that you know what will happen, but if this happens, if price does this, then I think I would do this. But here's what I want to see. Here's what I want to see on MACD. Here's what I want to see on RSI. That's one plan. Then you put all of that in a folder. And then on Sunday, you make another plan. Now, if price does the opposite thing and goes down, here's what I'd want to see on MACD. And you draw it all out because you can't predict what's going to happen. So you have to be prepared. This is generally known as algorithmic trading. Algorithmic trading is trading with a strategy, and that's kind of the goal of the last 6 times we've met, to get you to have a strategy where you have these levels, you have trend lines, you have the moving averages, and then you also have the MACD and the RSI to confirm what you think. And you're just trying, and now we have our 2 time frames, environment versus execution. So environment is looking at the daily to see what is the big market picture. Execution is like the 10-minute, the 30-minute. That's where you would actually make the trade. You want a paper trade. And the last thing I want to talk about today is called back testing. Because this whole idea, everything we've learned so far, and next time, as I said, we'll get more into stocks and how you look at the stock to see if it's valuable. But everything we've learned so far is guiding you to be able to set up your own trade. So how do you know if it works? Let's say that you have a strategy. Your strategy is, and you have to make your own strategy, but let's say your strategy is you like to enter a trade. Now, here's what I said I'm doing right now on DOT. DOT is a coin called Polkadot that I like. Do you know, anybody know who, I think her name is Hanoi Kusama? She's a Japanese artist. Yayoi. Do you know Yayoi Kusama? She's an old woman who's absolutely, here's a picture. You're going to tell me you don't love this woman? Look at how crazy she looks. That's Yayoi Kusama. She's very famous. She had a big display in Shanghai last year. She's famous for making polka dots. She makes whole rooms that are nothing but polka dots. She makes gigantic sculptures that are just, this was one of her displays in Shanghai. She just loves polka dots. And she's crazy. Like literally crazy. But she loves polka dots. And I like her. And there's a coin that's actually based on her called DOT, which I like. So here's what I'm doing. I was looking at I started with the 1 hour. And what I wanted to know is, what are all the times where price went up or went down? What were the places where it would have been a great time to buy? So like over here, this would have been a really good time to buy. And over here, this would have been a really good time to sell. Now I need to go backwards in time and look at the chart and say, okay, this would have been a good time to buy. What was going on then? So let me take this off for a second and put on what you guys are using, MACD, and let's put on RSI, because this is what you guys are using right now. But that MACD is too ugly, and I need it to be pretty. So first of all, I don't really want these lines. Second, we can do a lot more with these colors. Today, let's do light green, that, then let's make this green, let's make this orangey, let's make this like a pink. Look how nice that looks. That's weird. Oh yeah, there we go. That's more fun. Look at that. So nice. Okay, so I was looking around here. This would have been a pretty good time to make a buy, I think, because price went up, but it's not the best. Price didn't go up. Let's look at here. This is a great time. Price went up a bunch. So what would I have looked at, or here? I mean, this is an amazing time to buy. What would I have looked at if I was looking right here? What did I want to see? Well, price came to a daily level. So that's the first thing. Price came down to a daily level. Then what else was something showing me? Did I have swing highs and swing lows before this? I had a swing low. I had, so here's a swing high and a swing low, a higher swing high and a higher swing low. So already I was in a trend. So I'm in a trend, and price hits a daily level, touches it like 3 times or something. What's going on in MACD? MACD is very deep, but it's curving upwards. And RSI is kind of in the middle. Now, what I'd want to do is create a strategy based on that. Here's what my strategy list looks like. So I'm writing down the date and the time. Where was the price? Did it close above or below the 21 EMA? Were there any divergences? Let's see, were there any divergences here that would have told me to get in? You have price going up very clearly and momentum going down. Well, that wouldn't have given me anything good. Any divergences on RSI? No, because price went up more. So that wouldn't have helped me. But I try to make this kind of strategy to figure out what was going on in the market at that moment. Where was the, the RSI and what level, things like that. And then, like here, this would have been an incredible trade, obviously, if I could have got in, over here at 24 and sold at 31. That's a huge trade. What was going on at that moment? Here, I would have had a divergence, a really nice one, right? Price was going down and MACD was going up. That would have been a nice divergence. RSI was very low, almost at the bottom. So if that's what I'm looking for, if that's my strategy, I need to pick and choose my battles. So the way I backtest, let's say I want to know if this really happened to me, would I be ready to do it? I'll choose a point and I'm going to go to Market Cipher. I'm going to go to Trading View and this button, Bar Replay. So you click Bar Replay and then you can click a space on your chart. Let's say I want to choose here. Now it will show me the chart as if it was August 26th. And I can do forward and it'll just show me the bars as they happen. Or I can just play. And this is the speed. There'll be a new bar every 3 seconds, let's say every 2 seconds. Make it every 1 second. And you can just watch the chart. This is how we practice. We have a plan, we have a strategy, and we use this backtesting thing to just watch the chart in the past and see if this is what was happening. And of course, this is very fast. You could slow it down, make an update every 3 seconds or 2 seconds or whatever you want. And you think, and you watch this and you think, okay, what's happening now? MACD is going down, RSI is high. Now let me pause this here. What would I have done at this moment? MACD is going down. RSI has hit a very high point and price has just crossed a daily level, if I was, a gambling person, I would short here. That's what I'd probably do, right? I would short at this level. I'd put this below the higher swing high, and I'd go down to this level. And I'm curious, would I have been right? Let's keep going. And let's watch. Would I have made money? Now, I'd probably have take profits along the way. And so maybe my first take profit would have been hit. But I'm still in the trade. Now I keep watching the MACD. Now MACD is starting to go up. RSI is still pretty low. I'm still in the trade. I mean, this MACD is, I don't know, it's not looking good. I would want to see this get lower. Oh, here we go. That right around here definitely would have been one of my first take profits. So I would have taken my first profit, and then when I took profit, remember, I would have moved my stop loss. So I'd move my stop loss. Now I can't lose. And maybe I would, so let's say I want to stay in the trade. Let's see what happens. I might have hit my second take profit there. And I'm out. I just got knocked out of the trade. But I would have made the correct judgment from here down to here. That's not a bad move. Now, how would I have known what to do here? Let's go back, because I was just looking for the price to go down. Let's go back and try that again. I want to go back to chart replay. Oh, let me go back to that time. Let's go, yeah, here's where we were. Chart replay, this arrow, let's select here. Okay, and now it's going to show us as if it's happening right now. Let's move this to every 2 seconds. And play. Now, what could I have been looking for to know that that price was about to go up? I'm looking at MACD, I'm looking at RSI. What would tell me that price might go up? Well, if RSI goes very low, then it's oversold, price might go up. If MACD has a divergence, here we have price going up. Here the MACD is pretty much staying the same. Here price is going down. We're looking for these same things, divergences. We're looking for, I could put on the EMA. But if we're just watching that RSI, okay, here's where we were making money before. We hit our take profit, we're doing well. What's going on with MACD? Very light. Look at all these green candles. A lot of green, and that's people buying. Oh, wait a minute. I see price making a lower low, and I see MACD going higher. You see that? Price went down. MACD went up. So I think there's a chance already price is going to go up. What happens next? Ooh, what do I see on RSI? That looks like a W to me. Here's like a little W. W's can be on anything. You can find W's on MACD. You can find W's on anything. And M's. Okay, let's keep watching. Still seeing a bigger divergence even now. Price, it keeps going down. MACD keeps going up. I mean, this divergence looks powerful. I think price is going to go up. And look how low RSI is. It's very close to oversold. This would be a place I might think about going long, that it might go up. You have a divergence. You have a low MACD. To me, this would have been the buy place, this right here, because this is the next swing low. And the MACD has confirmed we have a divergence and a new swing low. I think that's where it might go up from there. And there, my take profit would have been hit. Both of my take profits would have been hit. I would have moved my stop loss up and I'd be in profit. You know, so that's kind of the testing we want to be doing. You want to figure out a strategy of what you think might happen. You want to write down at that time, what would the market have been doing? Is there a W? Is there an M? Is it near the 21 EMA? Is it a daily level? What's the MACD? What's the RSI? And then you want to go backwards and play with this back testing tool and just watch it and say, are my predictions right? That if it does this and if this does this, then it goes up? You know, this is definitely something that it takes a while to learn. But, you know, I'm not saying you need to start trading now, but now is the time for you to start watching the charts a little bit. Okay, so let's stop there. Are there any questions? So, you know, there's no homework here. It's not a, you know, but keep working on your own charts. Play with it, you know, try to find the M's, the W's. It's one thing to hear me say it, and it's another thing to remember it. You know, definitely. We just all, I know I studied it, all gets jumbled, and RSI, what does RSI, and what are these lines, and what, how do you know if a W is good? So do a little drawing, and then next week we're going to talk about stocks, right? How do you look at a stock on Yahoo Finance or something and know, like, is this a good stock? Does it have a lot of debt? You know, do the insiders own this stock? You know, we can't necessarily know what's going to happen to the price, but we can analyze a stock, and that'll help us a lot. So that's what we'll do next week. Cool, then. I will see you guys next week.
Bye.